All right, folks, let's get into the financial reasons why Gap Inc. has not done so well in the markets. Today, the Gap stock, which is ticker symbol GPS, dropped about 4%, a little bit more than 4%. It's been a pretty rough week overall for the company. Now, some may speculate that this has something to do with the quote unquote racist advertisement that Gap ran recently. And this is nothing. That whole issue is, as I've argued in my previous video, that this is a manufactured controversy. It has really nothing to do with the volatility that you see in Gap stock. No, the problem with Gap stock is that their same-store sales, when you compare it year over year, quarter over quarter, it's done very poor. Now, their business strategy shift was supposed to be a panacea, but instead it's turned into panos. Now, some of you who, there may be two people that got that joke, but for those that are not familiar with Russian, panos is a term for diarrhea, and that's what Gap stock is facing in their future, is financial diarrhea. When you look at it, this is a very weird situation for Gap because fundamentally they are unsound. I understand in February and the early part of March that the shares jumped up really high. I think it has to do a lot with some of the nuances of technical trading. Maybe there was a short squeeze there that momentarily pushed GPS stock higher. Okay, great. But fundamentally, this cannot last indefinitely. And, you see signs of that starting from mid-March, that the GPS stock has started to trend in a downward channel. And right now, with the March sales being released, those are very, very poor results. And it was a pretty ugly day today for Gap. Again, the shares dropped a little bit more than 4% and under high volume of nearly 10 million. So yeah, this is a pretty ugly day. And you look at the fundamentals and you start to see a clear picture why that is. Now, people will argue that the profit margins are positive for Gap, and in fact that they are much better than the retail apparel industry. And I would understand, look, that's very true. That's a very true statement. However, the reality is that Gap is not gaining anything on the top line or on the bottom. And you look at the price earnings ratio and you get a very clear picture. Because on the trailing 12-month PE ratio, you're looking at Gap stock trading about 13 times earnings. And then you look at the forward price earnings ratio. This is the PE ratio based on the forecasted earnings trend of Gap. And it's still the same at 13 times earnings. So it hasn't changed. There's a predictability there. And the predictability is a negative predictability because you're looking at top line sales that are declining, and likewise you're looking at bottom line sales that are declining. So you're not winning on volume, and you're not winning in terms of your premium products. You're not winning primarily in your flagship Gap store, nor are you winning in the Banana Republic. The saving grace for Gap is in their volume fighter, their fighter brand, which is the Old Navy. The Old Navy stores are doing well, but that type of volume strategy does not apply to the premium products, Gap and Banana Republic. And to think otherwise would be a big mistake. So this is a stock that, there's a lot of chaos, I believe, going on in the Gap's management team. And so this is a stock that I personally would stay away from. I would personally stay on the sidelines. I think there's too many questions. I think the retail environment is very poor overall. I think the economic indicators are very poor overall. I don't like the labor market. And if you don't have a strong, robust labor market, why would you have strong consumer spending? And in fact, that would be even a bigger red flag, is that you have a in reality a weak labor market propping up a strong consumer market. That is a very discrepant indication that this is a bubble, and that bubble will suddenly burst. You don't know when it'll burst, but you get a feeling like, oh crap, this is not sustainable. So yeah, Gap stock is having an oh crap moment, and I think this will be a pretty ugly bloodbath until they start to really think through how they want to strategize, how they want to grow their business. Because right now, when you look at the total portfolio of assets at Gap Inc., you don't see the growth potential. We're not seeing it at all. We're not seeing it on the top line. We're not seeing it in the bottom line. And that negative assumption has become too predictable for Wall Street, and they are not happy, because why would you invest in something that has really no potential either way? So that's a major dilemma. Maybe they'll figure it out, but for now I'm just gonna stay away from that thing.